And I'm saying, here's why we want to buy here. Here's why I think a stop would go here. But, it doesn't mean buy there at that exact price the next day. It means see how the market opens. Do you like that stock? Does the personality of that stock make sense to you?
Hello everybody, this is Anthony for Investors Underground. In this interview, I had the opportunity to speak with the trading legend in Mr. Brian Shannon. Brian has over 30 years of experience as a trader and educator. He's considered the leading global expert on anchored volume weighted average price, or anchored VWAP. Brian holds a chartered market technician designation and has written several books about his trading methodology, including Technical Analysis Using Multiple Timeframes and his most recent book, Maximum Trading Gains with Anchored VWAP, the perfect combination of price, time, and volume. He's also the creator of Alphatrends, where he provides his expert market analysis on a daily basis. Hello, Brian. Thank you for being here and taking the time to speak with me today.
Thanks, Anthony. It's been a while, so it's good that we finally got it set up, right?
Absolutely. I've been looking forward to this interview with you for months and months now, so it's great to get a chance to finally talk like this.
Excellent.
Brian, as an interviewer, I would imagine so many are tempted to begin asking you about the market and where they should buy the dip and particular stocks. But I would like to start before that. So, if it's okay with you, I'd love to start by asking, how did you first get interested in the stock market and trading?
Yeah, this is a story I think I've told a couple times. It began with my dad, actually, who was interested in the market. And this was back in the early 80s. So I'm dating myself, obviously, here. But, I would hang out on a Friday night with him when I was 12, 13 years old, and he'd be watching that. And I started picking up things. And then, we lived in the Boston area, which at the time had a real car theft problem. They were called the car theft capital of the world. So I had, watched a local news story about this company called LoJack and found out that they were publicly traded. I wasn't really sure what that meant. I knew they had stock is basically what I knew. And I said to my dad, hey, this seems like a good thing. Can we buy some? So he said, yeah, let's go ahead and buy some. The stock was $5 per share. And I put up, 500. I was a hardworking kid. I caddied newspaper routes, sold gum in school, all kinds of little things. So I put up $500. He put up 4,500 and bought 1,000 shares. Well, Anthony, the stock went in about 3 or 4 months, I think it was, maybe 6 months, I don't remember, to $10 per share. And I said, hey, Dad, can we sell now? And, he let me keep all of the profit. So basically, that's what I wanted to do with my life, because, here I was, shoveling, caddying, delivering newspapers and making, small money. And here's a good idea, getting paid for your brain. So that really got me hooked. Then after college, I went to work as a retail stockbroker in Boston. And, little did I know what I was getting into, truthfully. I thought I was going to be, more of a trader, being able to, trade rather than be a telemarketing person who would call people up and say, hey, I've got this great stock for you today. So, after a couple years of being a broker, I realized it really just wasn't what I enjoyed. So I switched to becoming a trader, which was a huge risk because I was young. I had very little money. A lot of it was borrowed that I used for that trading and leveraged it. And, just had a real strong sense of risk management. Basically, the brokerage business helped me realize that, because I, would buy some story stocks for customers. They'd lose their money and I wouldn't know what to say. I'd, feel badly about it. So fortunately, I read some books, got interested in, technical analysis and risk management, and, just kind of progressed to different portions, areas of the business since then, but always been trading and started teaching some courses when I opened a day trading office in Denver in what was that, 25 years ago, 26 years ago. So that was, maybe like 1996, I think, 95, 96.
Do you remember some of the early lessons that you had to learn in trading at the time?
Yeah, I think, Anthony, one of the best things that happened to me is right before I became a leveraged prop trader for a company in New York called Generic Trading. I set up remotely, and this was, 24K modem dial-up. But that was the best they had at the time. And I was so excited when we went to a 48K modem. I know a lot of the audience is probably thinking, what the hell does that even mean? But the point is, I had borrowed money and I had an account. I was trading pretty aggressively at the brokerage firm I worked at. And right, about a week and a half before I was ready to quit the firm and go trade, I was trading a stock called Chantel Pharmaceuticals, which wasn't really a pharmaceutical company. They just called themselves that. And they had a great story about this anti-wrinkle cream. And I was trading it really well. And I needed to get my account to $25,000. And I got it to, 22, 23, 24. And then I held 2,000 shares over the weekend. And then I remember Monday morning, I was actually skiing, and my brokerage assistant called me up and said, "Have you seen your stock?" I'm like, "No, where is it?" And Barron's had done a hit piece on it over the weekend, and the stock gapped down. I lost about $12,000, and so I was just devastated. And so I got my credit cards out, got cash advances, and ended up doing it anyway. So I say it was fortunate because it really got me thinking about holding story stocks, and it was a great lesson to learn. I still to this day don't trust biotech stocks. I've just because you look at the new low list every day, there's some big biotech stocks, and I know that Investors Underground, a lot of you guys like to fade those moves that these little fly by night biotechs that come out with a press release. So that's not my game, but I certainly, respect that there's so many different ways of making money in the market. And that's really, I mean, I'm kind of getting ahead of myself here with that, but that was really the first formative real lesson that got me to respect risk.
We still see that today. It's sort of this
Yeah.
evergreen sort of phenomenon in the world of trading.
Yes.
Yeah. And so, Brian, I wanted to talk a little bit about your style and how your style of trading is today and how it might have changed over the years. So,
Mhm.
how would you describe your trading style today and where you find edge in the markets?
It's evolved, obviously. Everyone, a strategy evolves and grows, and you add certain things, and sometimes you do, take certain things off your strategy that just don't seem to make sense anymore. I'm a swing trader, and that's really throughout my career, that's been my sweet spot, mentally and profitably. I've done a bunch of day trading, but now I'm at the point where I just don't feel like battling it out day after day, looking at level two screens and 1 minute charts. So I like a little bit more relaxed pace. And what my strategy again is swing trading. I prefer long, so I'm much better on the long side than short side. I think you have to be, especially, with shorts, when you're holding them overnight, that's where the real risk is. You get those nasty gap ups and that sort of thing. So I'm a trend trader. So I look for a primary trend that's, ideally in an uptrend, an established uptrend. I look for it to have pulled back on a shorter term time frame, maybe a 2 to 4 day pullback, and then go sideways for 1 to 2 days. And then I buy the emerging strength out of that. So it's always multiple time frame analysis based. And that's where I kind of start everything that I do. And then I start looking at, on an intermediate term time frame, where are we in relation to the anchored VWAP from the most recent high that we pulled back from? How about from the low that occurred, 3 weeks ago? That was, the correction of this most recent really, rally. So those things together, along with a 5 day moving average, and then looking down to a shorter term time frame, and first couple minutes of the first, let's say half hour of the day, I'll look at a 1 minute chart. After about a half hour, I look at a 2 minute chart. After about an hour, I switch it over to 5 minute. And then, that becomes my main, execution area. But it's all to make sure that it's aligned on the multiple timeframes, that I'm catching it, as that momentum begins. And then, of course, the biggest part of it is risk management. And where do I have my stop? My stop is always the same. My target is always the same. My target is always higher. I'll let the market take care of it. I have a little bit of an idea. Like I might say that there's prior, support that could become resistance. So I'll have that in mind. But it's up to me to not tell the stock where I think it's going to go, but to listen to the message of the market, trail my stops up. And my stop is always in the same place. It's the most recent relevant higher low. So if as a trend trader, if it breaks that short-term higher high and rallies up a little bit, but then breaks the previous low, well, the definition of trend that seemed to be emerging no longer exists. So I'm just going to get out. It's just a matter of, the definition of trend. I'm a trend trader. If there's no trend defined there, then why would I still hold the stock? So it's pretty simple, really.
How long did it take you to really hone your methodology and the way that you trade? I would imagine it wasn't sort of an overnight discovery, but something I would presume that took some time.
Yeah, I look back and it's kind of funny because I've been doing these YouTube videos for 18 years or whatever it is, ever since YouTube started. And I once in a while go back and look at what I used to do, and I look at my charts and I'm looking at it's got that 5-day moving average on it. It didn't necessarily have the same anchored VWAP, but that really in 2015 when TC2000 added the anchored VWAP at my request to their software, that really was kind of a game changer and really let me look at this more. That was kind of an aha moment. It really just helped define that much more what I was doing. I had a good strategy, but I was often getting involved before I should have, or maybe getting involved late in chasing the stock. So the anchored VWAP was a tool that I looked at that just intuitively made sense. And then when they, TC2000 added it to their software, it just made it so easy to see how valuable this is and how it's used by unseen market forces, institutions. We don't know who they are, but we know that they're in there using this, and it's just become, that's what became the biggest game changer. Between that and the prior 25 years.
You definitely have become the global expert when it comes to anchored VWAP. I wanted to ask a little bit about how you came to discover, not just anchored VWAP, definitely I want to know about that, but also VWAP itself and what it was like when you discovered anchored VWAP.
Yeah, I remember I was sitting in this little office in Boulder, Colorado, on Realtic software. Realtic, I believe they're still around under a different name. They've changed names a couple of times. But on that software, I liked their charts. It's what I was used to. And they had a VWAP indicator. So I looked at it and I noticed that it was, it would start at 9:30 a.m. and develop and build throughout the day. And I started noticing, hey, isn't that interesting? It kind of bounces from that level sometimes. What is this thing? And there wasn't really a lot to find on it. So I kind of played around with it. Then one day I changed the time frame to like a 10-minute chart and switched it to 5 days. And then I noticed that VWAP would stay there and it would build for the 5 days. So it became anchored to 5 days ago. So unbeknownst to me, I was kind of experimenting with an anchored VWAP, which didn't exist on any software that I was aware of. I kind of just found a way to look at it. So that, I would start to look at it and go, okay, well, the earnings were 13 days ago. What if I look at this 15-minute chart and I make it for, what did I say, 13 days ago? I would see that the VWAP would start on that day that the earnings were reported, it gapped up, and it would follow, and it would be like magic. I'd look at it and go, holy crap, there's something going on here. The stock keeps pulling back to that and immediately bouncing. So that, and then I also, I couldn't do it on a daily time frame. It was only intraday. So I couldn't go back far, really far to experiment with it. So I found that there was a trend tool, and the trend tool, they had a trend line tool rather, sorry, where they had the regular trend line where you click and then pull your mouse and then click and then it sets there. Well, there was this other one and it said VWAP. And I said, well, I wonder if that's the same thing as a shorter term time frame. So I took that and it was the same thing. You would start it, you would click and start it and drag it to the, from left to right. and it would rise. If the stock was in an uptrend, it would rise. If it was in a downtrend, that trend line, which remained horizontal, would decline. And I lined it up with a VWAP chart, and I said, this is what's going on. It's just showing it as a trend line throughout, a horizontal line, giving you 1 point. It doesn't give you the trend of it. So that, between those two things, I was able to say, okay, well, look at that. If I anchored at the beginning of the year, here we are in August, and it's bouncing perfectly from that anchor from the beginning of the year. I wasn't even calling it an anchor then. I didn't realize, what was going on, but just the starting point. So those couple of things in 2003 on TC 2000 really, I'm sorry, that was Realtic, really helped me, see what this was. I then, like I said, TC 2000 asked me, hey, do you want to use our software? We think you'd like it. And I said, well, listen, I don't like changing softwares. If you do this, though, if you build an anchored, a volume weighted average price that I can point and click and it builds from there, an anchored VWAP, then I'll come use your software. About 3 weeks later, they built it. They call it the Anchored VWAP by Alphatrends, and it's been on there. And that's, slowly and more rapidly recently, a lot of other firms have, softwares that have added it to make it, kind of a standard tool now.
That's fantastic. So they were able to build this indicator out for you and this functionality. One of the questions I had was, did you have any resistance from other platforms to try to get it implemented in other pieces of software? Or
yeah, I'm smiling because there's one in particular. I won't name who they are. They're just merging with Schwab. People can figure out who that is. But their software, they have. I mean, it's crazy, Anthony. I for the last, since I first showed people that in 2015 on TC 2000, people have said, hey, why can't I get it on this software? This is one of the most popular trading platforms there is out there. And, I said, I've told them, listen, I've emailed them. I've offered to do webinars for them to show them the value of it. I've sent them videos that I've done. Here's the email that I use. Go ahead and sell that, send the request to them. And I know for a fact that thousands of people have sent the request for the anchored VWAP to this company. And for whatever reason, they just don't add it, and they're infuriating their customers. But there are a bunch of them that, I won't focus on the negative because it's so many others have embraced it. Stock charts, TrendSpider, who else? Well, TradingView, obviously, a lot of people use TradingView, and they have it as a standard tool there. A lot of people always ask me, how do I find it on TradingView? And you just Google my name and TradingView Anchored VWAP, and you can find a short video I did on that for those who are interested. But it's becoming a lot more of a standard point and click feature, and I think it's just awesome.
Yeah, that's tremendous that more platforms and pieces of software are really implementing this, because your results show that there is value in it. And so the other thing I wanted to mention too, in your book, there's a part of the appendix which does have a pretty comprehensive list of platforms that do have it. So I think that was a really neat thing about your book, was that it lets you know where you can start to use Anchored VWAP.
The funny thing too is, Anthony, is a lot of people say, well, don't you think it's going to stop being effective if you keep telling people about it? And, there's, the turtle traders everyone's heard of. The turtle traders have this fantastic, pedigree of all of these people who, went on to become billionaires and some of the best trend traders ever. And they've used the same rules or slightly modified them over the years. But those rules are available publicly online, and anyone can use them. And the person who published them, said what I think is the best answer is that most people are going to misuse them. They're going to try to tweak them differently. They're going to try to outsmart the system because it seems too simple. And the same thing is, going to happen with the anchored VWAP, is that, people will show me what they think is an anchored VWAP pinch. And I look at it and go, they're 40% apart between the two. It's not a compression of energy. But there's all kinds of ways that, people are are learning it, which is great. But there's just still that human nature that people are going to try to, make it smarter and, try to, people think that more complicated is better. When, one of my favorite quotes, I forgot who it might have been, Adam Smith, simplicity is the market's greatest disguise. And it's so true.
And that's a great point too, because technical analysis is one thing, but once you're actually in the trade, it becomes a matter of risk management, and that can vary from trader to trader.
Yeah, and I mean, technical analysis is a tool, right? That's all it is. I mean, just because you give somebody a hammer, some boards, and a nail doesn't mean they're going to be able to build a house. You're still going to have price, volume, time, some moving averages. People are going to add their stochastics, their MACD, and whatever else, they think gives them advantage, and they should use those. But the point is there's so many different tools available. The reason that I look at anchored VWAP is because it represents the truth of supply and demand from any point you start at. It's you can't argue with it. It's math, and math, the rules of math don't bend for opinion. So we look at it and we have to accept it as fact. But then we have to analyze and say, what does that mean in the bigger picture? How does that fit in with a different time frame? How do I use that to anticipate what might happen rather than just blindly buying a pullback to the VWAP or things like that? That there's a lot of art to it versus the science of technical analysis. And this is what you were pointing out, is the art of trading and getting into the risk management, position sizing, knowing what the current market environment is that might not, favor your favorite strategy, but maybe your least favorite strategy is starting to work a little bit. So you go with that for a little while, and that becomes your bread and butter till things change back around. So, we've got to be, we can't be rigid in our approach.
Absolutely. There's so much art that still exists within trading.
Oh, yeah.
And one of the questions I had, Brian, is in terms of who uses VWAP, or even anchored VWAP for that matter. We know that, some retail traders use VWAP, you and many others use anchored VWAP as well. Are some of the bigger institutions focused on VWAP, or is that something that they just disregard?
No, that's actually some things that I wrote about in my book. In fact, the VWAP itself was created as an institutional tool in 1988 to help institutions realize whether they're getting a fair price for their orders or not. So the VWAP is for one day. The anchored VWAP simply means you start the beginning of the VWAP measurement from any place other than the beginning of the day. You could start it at 10 a.m. and that would be anchored to 10 a.m. Or you could start it to the beginning of the year, or December 18th of 2021, if that was the COVID low. It wasn't, but what I'm trying to say is important events. So when we look at that and say where the VWAP itself came from as an institutional benchmark, there's an example in my book where I spoke about Warren Buffett went and sold a bunch of his he sold out of his airline stocks. And they announced that, he started selling this day. It was a 2-day liquidation because he has to act quick. He can't let people know he's selling because everyone else will front run him. So he had to get out of it quick. And it was a VWAP guaranteed order by his broker, because when I looked at the price they reported they sold these 13 million shares at, it was the exact volume weighted average price for those 2 days. So what happens is the institutions, in order to try to get business from someone like Warren, will say, hey, listen, call us up. We'll guarantee you volume weighted average price. And if we do worse, that's on us. If we do better and we're able to, if the VWAP for the 2 days was $23.42, if we sell it at 23, well, we eat the 42 cents on the 14 million shares. We'll take that, but because we want your business, Mr. Buffett. Or if they say we sold it at $23.60, well, that 18 cents difference, good job on them. They beat the market on an impossible order, right? To liquidate that much. So they keep that. So it's just a standard way of saying, are my brokers, are they ripping me off? or are they, doing the right thing for me and getting me a good price? So it keeps the broker and the customer really aligned in the same way that we're trying to do at least this good for you, at least, they call it the price a naive trader could expect to get is what VWAP is really kind of, called. So if they're doing that, they're doing a good job for their customer.
That's pretty fascinating. And I remember reading this example in your book and thinking to myself, well, if VWAP is good enough for Warren Buffett, I'm sure that it's good enough for retail traders out there. Granted, they learn about it and know how to use it effectively.
Right.
And so for anchored VWAP, what are some popular anchor points, or at least anchors that you would recommend for traders who want to learn and start using anchored VWAP?
You can go on for a while here, and that's where it could get a little confusing, is that there's a lot of different strategies you can implement around the volume weighted average price and the anchored VWAP. So for me, I like, for where there's a big catalyst in the market, a catalyst that changes price rapidly, and it's usually accompanied by large volume. So events like the Federal Reserve announcement, an earnings report, CPI, things like that. When the market gets a real shakeup, then we want to measure the average price since that point. So those are great. As I mentioned earlier in my, swing trades, what I want to see is the stock correct for, 3 to 4 or 5 days, turn sideways for a day. And I want to see the average price from that prior peak start to come down. And as the price kind of bats up against it, it breaks up through that level. The point where it breaks up through the level from the high, so let's just call it 6 days ago, it tells me at that point with 100% certainty that the buyers have regained control from the average price during that stock where it made that high and began a pullback. The average short seller who was trying to, short during that pullback is on average losing money. Doesn't mean they all are, but we're interested in the crowd psychology, crowd behavior, and the net, effect of them on the stock price, because that's what stock prices are. So we want to look at that and say, here's where the buyers are in control. Now we have to consider that that's not an automatic place to buy the stock. How did it get there? Did it just rally, 8% in 2 hours to get through that level, and now it's a little bit extended, and maybe this is a FOMO purchase? So let it settle down a little bit. So from that pullback high, and maybe from the prior, swing low, where it might have gone from, let's just say 20 to 30, and then it pulls back from 30 to 34, and we have that anchor from the to 24. We have that anchor from 30 that comes bearing down on it, hits it at 25, then finally breaks through. And underneath, you'll see the volume weighted average price from that 20 low come in and cradle it. It might hit 19 and bounce. It might hit 20 and bounce. Then it comes up and the range compresses between those two off of the swing low and swing high. And we start to see that compression in energy, saying the buyers are defending it because it's bouncing from the VWAP from below. And the sellers are becoming less aggressive because that's flattening out. Now the bigger trend is in an uptrend. So now I want to watch for the shorter term time frame that the buyers gain control. And again, how did it get there? Where does my stop go? How can I participate? And that just, comes down to shorter term time frame analysis and keeping emotions out of it as best you can.
That's fascinating, because you're doing a couple things that I think are really helpful and make a lot of sense when we think about it. So you're not just looking at for a price for a stock to come down and just simply sort of scoop the dip. You're looking for some sort of sideways action, and you're kind of waiting, it seems like, correct me if I'm wrong, but you're waiting to see where a price stabilizes, and you're looking for some strength after that stability, rather than just something touching anchored VWAP and then just buying and hoping for the best or something like that.
Yeah, exactly. I mean, the VWAP, the anchored VWAP is like any other technical tool. It's a guidepost. It says, here's a level of interest. It's at the 50-day moving average. it'd be foolish to buy just because it touches the 50-day moving average. What I want to see is on a shorter term time frame, are the buyers actually gaining control, or is it just continuing to slice down through that level? There's no guarantee that it will be purchased. So what we want to do is stand back and say, listen, V bottoms do occur, but they're less likely. There's normally that smooth transition from a seller controlled market to a more neutral market to the buyers back in control, or vice versa. So I don't want to get excited about that first bounce, whatever, and I always say constantly, don't buy the dip, buy strength after the dip. So we want to see that it's not just a blip in a downtrend, but there's a solid band of support underneath this, that it's gone sideways for a day and a half, 2 days. Those are my favorite stocks. I start watching them as the 5-day moving average is still just curling down, but it's about to flatten out. That tells me the time correction is likely over. And now I want to start to set alerts to see how it behaves. And that's where it comes down to anticipatory analysis, saying, if the range tightens, then I want to look at it and say, okay, now I can look at this stock and say, if it makes it above $26.20, that's where it makes the higher high. It looks like there was a good low at 25.78, so I'll put my stop at 25.76. And if it gets going, I'm going to take a third off quickly, and I'm going to raise my stop underneath the successive higher lows. That's where the whole plan starts to come together. It's about, someone asked me recently, what's the most important time frame? And I said, it's all of them and how they dance and weave together. It's, I've made the example of, it's like asking a famous painter, what's the best color to use? I see there's a lot of blue in your paintings. Is blue the most important color? Is that what I should do? And that's what people will, do. And that's just the wrong way to think about it. It's your art. If you like blue, use some blue, but also don't forget, you've got these other colors as well. Add some of that in. That's what makes the art. That's what makes it personal. And, no one should be looking to copy other people's trades. Instead, learn part of their process to help create their own way of looking at the market they can be comfortable with, and feel that they have the confidence that, yeah, maybe I heard about this stock on Twitter, but I'm executing under my lens and the way I see things, and I have the confidence that I'm going to get involved here, and if it drops down below that low, I'm going to get out, and I'm not really going to care. I'm not going to blame anyone. I'm not going to blame market makers or the news or whatever. You're going to say, hey, now I'm a professional trader. I'm making these decisions. And if I lose money, it's my fault. And, if I lose a lot of money, what happened? Did I, most likely I screwed something up and got emotional.
Absolutely. I think that's great perspective and highlights the importance of taking personal responsibility for a trader's own trades, because when you're making the trade, for the most part, unless you're in an institution or something like that, so many of particularly the retail traders are making those trades alone. Maybe they're bouncing ideas off people, but ultimately, yeah, they're the ones responsible for those trades.
Always, right? It's crazy to see some people who just come out, think there's excuses for why they lost money. Well, it wasn't my fault because this market, man. No, it's your fault. Just accept it, or just quit trading if you can't accept the personal responsibility of it.
And the other thing that really strikes me as well is multiple time frames and how you use them. I can imagine that's going to be so different from trader to trader, and it's almost inevitable that every trader is going to be using multiple time frames in a unique way that I would imagine no two traders are using.
So the way I wrote about it in my first book, Technical Analysis Using Multiple Time Frames, is that we want trend alignment. And what that just means is, if it's in a daily uptrend, we don't want to be buying it if it's in a, pullback for the last 3-4 days. Wait for it to stop, for the sellers to stop, and then, look to buy strength. So the way I recommend it is, whatever your time frame is, you want to use a minimum of 3 time frames, whatever the time frame of the trade you intend is. So I use the example of a swing trade that, basically the daily chart is what you need to identify your stock. But then again, I'll footnote that and say, if you can't see resistance or something on that daily chart that might be important, well, then you have to go to the weekly time frame as well. So when I say a minimum of 3, it doesn't mean just the daily. It means, well, how does that fit in with the weekly as well? Can you learn something more by looking at the weekly chart? So then, I'll go down to a 30-minute or 65-minute time frame. And that's the place where I'll say, okay, it's pulled back. Now it seems like it has a potential to find support in this area at this moving average, this Fibonacci, this anchored VWAP. So if it does that, how can I anticipate it's going to start to set up in here in the next couple of days? And if it sets up properly, where's my potential for upside? Just a thumbnail sketch of, am I going to risk $3 to make $1? Well, no, of course not. I want to see that there's at least a good amount, 2 to 3 times more profit potential than there is perceived risk. And then go down to, so again, the intermediate term time frame could be a 65 or 30. So again, it's not one time frame. And then for the shorter term time frame to say, here's where I'm going to execute this trade. I mean, I might use a 1-minute chart in the morning, but I'll look to kind of see the 15-minute chart over the last 5-6 days, see how that's shaping up, and then look at a 5-minute chart and a 2-minute chart. So it's about, and that's really for me, by drilling down like that, that's allowed me to really get very accurate entries into these swing trades, so that I'm not feeling a lot of heat right from the start, hopefully. But what I'm doing is hopefully buying that first, short-term higher high. So when I get involved there, I usually have a pretty good amount of confidence that it is going to follow through. Again, a footnote though, what if the market's in a downtrend? So maybe I'll cut my risk in half and only trade half my normal size. Everyone wants the blueprint, but it doesn't exist. There's too many footnotes all over the place, and that's what trading is. It's a business of a lot of footnotes. So I will look at it and say what's most likely. And if I'm getting involved right at the onset of that momentum, it allows me to say, I can take a larger than normal share size here, but I compensate for that by saying, if I am in fact correct, and this is where the momentum begins, I'm going to sell some really quick, up 10, 15, 20 cents, even though my goal might be $2, $3 or something like that. It's simply reducing my risk because I got involved a little bit too heavy, and now I'm lowering my cost basis on the rest of it. And it just gives me the opportunity to be in that stock from more of a position of strength right from the start.
One of the questions I had was about how you tend to get into trades. Do you tend to scale into trades, or do you take your one position and just watch that very closely with a tight stop?
Yeah. So I do kind of a hybrid. I kind of like trade around a position. So for instance, if I buy whatever number of shares, it doesn't matter the number of shares. I might sell a third of that right away, like I said. Then if stock comes back, rallies up a little bit more, and then begins to pull back. Let's say I bought 10,000 shares and I sell 2,500 on that first strength, and then it goes 50 cents. It pulls back. It touches the daily VWAP, and it's coming down, back above the VWAP from the high it made at 10:17 a.m. Well, I might buy 1,500 shares back and ride those up to the next level that day. But at the end of the day, I'm probably going to sell those add-on shares so that now I've got 7,500 shares but I've traded, I've bought 10, sold 2, bought 1,500, sold 1,500. So now I've got the amount of shares that I want that I'm still comfortable with. So, and I've scalped a little bit out of the trade. And I might do that the next day as well. Let's say it gaps down to the prior day's volume weighted average price. So if today's Monday, on Tuesday, it gaps down to Monday's VWAP and then gets, turned sideways for 10 minutes, gets above the daily VWAP, I might add those 2,500 shares back again. And then, look to sell those as it gets back, let's say it gapped down 30 cents. I might look to sell those. I bought it down 28 cents. I might look to buy, get out of those at break even on the day, for the stock at break even. So now I've got my original 7,500 shares. And again, I've scalped a little bit out of it, but I've still got my core intact.
Are you often using different VWAP per time frame?
I'm always aware of, the year-to-date anchored VWAP on a daily chart, especially now that we're into July. It's not as important to look at it on a shorter term time frame. But I'll look at the daily VWAP on a 1-minute chart, and like I said, then I'll switch it out to a 2-minute chart. The thing about the VWAP is that, a common thing people will say is, well, when I look at the VWAP on the 10-minute chart and the daily chart, they're in different places. And that's simply because, how many denominators do you have? How many unit increments of time do you have on that 10-minute time frame from 5 days ago? Well, there's 130, or I'm sorry, there's 390 minutes in a day. So there's 39 of those 10-minute candles per day. So 39 times 5, there's about 190 candles over 5 days. If you're looking at that on a daily chart, your denominator is 5, right? So you're going to get a much more accurate reading. It's kind of like if you use, if you're building a house, and one of your tools, of course, is your tape measure. Well, could you imagine if your tape measure only had yards on it, and it didn't have feet, and it didn't have inches and quarter inches and eighth and 16th of an inch? You're going to get a different measurement, because you're going to say, well, it looks like it's about 1 yard, because it's 2 feet for 8 inches and 8 3/4 inches. But if you look down at the real small increments, you're going to get a much more accurate reading. And that's the same with the volume weighted average price. So my default answer is, whatever time frame that you can see before the stock gets all squished up, that's where you should be looking at your anchor. So if it's on a 1-minute chart early in the day, later in the day it gets too compressed, so maybe you're looking at your 5-minute chart rather than looking at it on a daily time frame.
Brian, traders might just naively think that you're focused just on the technical side, but I found that in your book and hearing you speak, you really have put a lot of attention into some of the psychology that's involved in trading, everything from bias to working out FOMO. Can you talk a little bit about the role of psychology and sort of risk management, and how you think about keeping your capital as a trader, and how psychology plays into that?
I mean, the whole thing is really kind of a psychology game. I mean, there's our personal psychology, which we have to, we're our worst enemy in there. Anyone can look at a chart and say, hey, it's in an uptrend, the buyers are in control. Great. How does that information help me make money today? Because it's been up 8 days in a row. Does that mean I can buy it here and expect to make money because it's in an uptrend? Or do I have to watch it drop 10% in the next 4 hours because I'm late to the party? So there's the personal psychology, and then the psychology of the market. And we have to think, what motivates people to buy and sell? Well, we're all motivated because we want to make money. How do we determine when to get involved, where to get involved? Well, obviously fundamentals. There's, that's what people learn. That's what you learn in grade school, right? You learn what a PE is. And then in junior high, they tell you cash flow. And then in high school, they tell you about dividend policies, and they never mention charts. So all these people are trained on fundamental analysis. Here's what a good growth company is. They sell, their revenues are increasing 40% quarter over quarter, 80% year over year. That's growing. The earnings are growing. Look at all the money they're making. So it'd be foolish to ignore that, especially for a swing trader. I want to know the psychology of, what are people buying? I might look at a company, and I'll look at my Market Smith charts, which have all the fundamentals on there. And I'll look at it and say, hey, wow, look at that. They're selling a lot of stuff. Revenues are up 65%, earnings up 238%. And I'll look at that and go, that doesn't matter to me. But I know it matters to a lot of people out there, that I know that if this stock is now in an uptrend and I see it pulling back, I know there are, hundreds of growth funds out there that are looking for stocks like this. So this stock is more likely to be defended and purchased at that 20-day moving average, 50-day moving average, anchored VWAP. So I want to know what they are, likely to be buyers of. That I'm always aware of, because it just gives me a little bit of extra confidence to know, okay, that company, it makes sense. They make this for, and blind people can see again, or whatever it might be, right? And then, the psychology of what we're seeing on the charts, what people don't get when they look at it a lot of times is they're just looking at a head and shoulders pattern, or they're looking at a cup and handle. Well, if you think about what a inverted head and shoulders pattern is, it's just a basic reversal is all it is. You've got a lower high and a lower low, and then you've got a higher low. And if it breaks the neckline across those highs, what does it do? It makes a higher high. So all we're doing is replacing lower highs and lower lows with that first higher low. If it makes a higher high, then this head and shoulders pattern is complete, they say. But what's happened is we've wrestled control from the sellers to the buyers. And that's a good visual tool to say, something might be going on in here. It's coming up the right side of that shoulder. Is there a way to get involved on a shorter term time frame and sell some on the breakout of that head and shoulders pattern? Because how often do people complain, hey, it was a perfect head and shoulders pattern, it broke but beyond the neckline, then it got stuffed. Well, try to think the next step ahead, anticipate the anticipators. I forgot whose quote that is, but that might be like Rockwell or someone like that said, the key to successful speculation is to anticipate the anticipators. Try and anticipate where that institution who's taken all the risk getting those shares is going to feed some out because it's on a popular broadcast with some great news, and it's just run 18% in the last 5 days. And the guy sitting at home goes, hey, dear, look at that. Wouldn't that be a wonderful one to add to our portfolio? And he buys it there. And guess what? You just got sold to by the institution that was accumulating it. And as it pulls back in the next 4 or 5 days and you lose your confidence and sell it, guess who you're selling it to? That same institution that's building for a longer term hold. Try to think, if you're on that, when you look at a chart, how would I feel if I bought there and I'm holding today? How would I feel if I sold there and I was out of it? And try to look at the chart as, human emotions.
And whether you're looking to increase your proficiency in chart reading, gaining a better sense of where market participants might be in a trade, or generally taking your trading to the next level, Investors Underground might have something to offer you. You'll have access to mentors and courses to learn from, some of the best technology available for scanning stocks and breaking news, and access to the chat rooms, where you'll find a vibrant community of focused traders sharing their ideas and insights in real time every day. You'll also have access to Nate's morning broadcast, the midweek study session with Sam, webinars, moderator watch lists, and all the other resources that Investors Underground has to offer. Listeners of the podcast can access special deals at investorsunderground.com/YouTube. And now, back to our interview with Brian Shannon. And I think that's something that traders sometimes miss if they're looking at just technical analysis, which is just, it goes here, so I buy or I sell, or it's good. It'll continue to go up to the moon, rather than thinking about, well, maybe when it gets to a certain level, that's where institutions and others are selling. So that might not be the best place to be buying a stock.
It's all supply and demand driven, right? So what motivates that supply and demand at different levels, and try to anticipate that. And you'll be much better off than just being the monkey who recognizes, a doji star, shooting star hidden inside of a inverted head and shoulders pattern, and, all these, Fibonacci. But why? Why are there buyers there? What drives them to buy? And that's really what it gets down to.
Sort of related to this idea of looking at charts and analyzing what might be happening and the psychology behind it all, you've said something that I thought was pretty brilliant. And it's, if they don't scare you out, they may just wear you out. Can you explain to those who might not know what that means and what you mean by that?
Sure. And it's something that I've often repeated. I don't know who to attribute it to. I don't think I invented it. I'm not smart enough for that one. But basically what they're talking about is, in the stage of a stock's life, it has that cyclical pattern. That stage one, it goes sideways after a sell-off. Stage two is the fun uptrend. That's the bull market. Stage three is distribution, where it kind of turns sideways, then slowly everything falls apart. Stage 4 bear market 2022. That, all the way down in 2022, I would post all the time, don't buy the dip, don't buy the dip, because everyone's saying buy the dip. And it's really, it's a foolish strategy, especially when the market had turned to a downtrend, not an uptrend. So what that means is simply that, in that downtrend, there's going to be bounces along the way. It's a pattern of lower highs and lower lows. Some people get excited because, hey, it went from 30 to 40, and maybe you can make a great trade in that, but just recognize it as a trade. If it's still below those longer term, 40-week, 30-week moving averages, and those moving averages are declining, you're still in a solid downtrend. But what happens after that is often we see, 6 to 9 months of maybe sideways base building. And people think, well, it stopped going down. Isn't that great? I should buy it. Well, just because it stopped going down, at least temporarily, doesn't mean it's going to go up. We still have that process of accumulation from the new smarter money holders from the older holders. So the older holders who are saying, you know what, I'm giving up on this thing. I just don't see it anymore. Zoom doesn't, Zoom's not a thing for me. I use these other 10 broadcast things or whatever, Peloton is just a stationary bike with a TV screen on it. I'm, going to sell out of that. Meanwhile, somebody else says, hey, they've got this whole new line of, and I'm making this up, whole new line of exercise equipment that's going to take the market by storm. And that's going to, they're going to announce those products Christmas of 2023. Here we are in July. We need to start buying stock right now in anticipation of that. So they're buying it from the old holder, and they're building their position until slowly, surely, all that supply is soaked up. The buyers regain control. And it can take a long time. It can take, that 6 to 9 months, maybe a couple years. You see these, stocks sometimes with years-long bases, and it breaks out of those. Well, just when it's going sideways, doesn't mean buy. It means, be patient. Wait for the sign that the buyers are actually gaining control. If they didn't scare you out on the way down and lose all your money, they're going to wear you out, because you're going to look at it and go, man, I bought this stock in February. Here we are in July. Everything's moving except for my stock that I like. I'm going to get out of that one right now. And I'm going to go chase this stock that was up. I'm going to go chase Carvana or something stupid like that. I'm going for the hot stuff instead. And, that's just again, it's back to psychology.
Thank you. I think that's extremely helpful. And Brian, I wanted to ask a little bit about Alphatrends. What really prompted you to open up and share your methodology and your trading? Because I've heard a number of traders mention Alphatrends and reading your blog and learning a lot from it. And they mention how that really set them on a good course. And it's all thanks to you and being open. So I wanted to ask about that.
Well, thanks. Prior to, I had worked at a company called MarketWise, and they were a stock trading school and had a prop department, which I was brought in to head up. And I was their head of education as well. And part of what I did was to write a daily note about the market. And I started doing it video and then uploading them to Google. And then that company got acquired by another company and basically dissolved their educational department and the trading department. So I was left without a job. And I said, here I'm going to go back to what I love, which is trading. I'm doing that 100% full time. And I started doing daily videos and putting them on YouTube. And they were really more just kind of my process of thinking things out loud. And if some people benefited from it, great. I was thinking, well, maybe one day down the road, I can do something about that. But now I'm back to, I don't want to deal with, answering questions from people. I want to just trade. So I did that for about 3 or 4 years. And then Howard Lindzen over at StockTwits said to me, hey, Brian, do you want to start a newsletter, subscription product? And I said, I've always kind of had that in the back of my brain, but I don't want to deal with websites and marketing and all that bullshit. So yeah, what do you got in mind? What do you have in mind? And he said, listen, we'll take care of all that nonsense. You just do what you do. So, that's what really kind of, was the impetus to get it started. And that was maybe 13, 14 years ago. So, I've been writing about about the market or talking about it video wise for 20 plus years now. And, it just kind of grew from there. And it's just always been something I never really marketed so much, but it's grown. And like you said, a lot of people have benefited from it. So that's great.
You provide a lot of video content and have been for over a decade now on YouTube. And
Yeah.
so one of the questions I had was, what have you found has been some of the impacts, or what are the benefits that traders can expect by joining a community like Alphatrends?
Well, for myself, what I do is I try to help people find their own way in the market. A lot of people will want to come to me and say, "Hey, Brian, tell me what to buy." And I'm like, that's not, I'm giving you stock ideas and I'm presenting them in an educational format. And I'm saying, here's why we want to buy here. Here's why I think a stop would go here. But, it doesn't mean buy there at that exact price the next day. It means see how the market opens. Do you like that stock? Does the personality of that stock make sense to you? I might mention an airline stock, but I have no interest in trading an airline stock. I lose money in them. They're commodity related. I don't like them. So trade the ones that make sense to you. And what I do is I'm there to answer questions. I've got webinars every other week that are interactive and answer educational questions, and really to help people. It sounds corny, but earn while they learn and figure out what their approach and their time frame is in the market. I'm very specific that I'm a swing trade service, but I often say, listen, but if you like this stock, it's breaking out of this beautiful stage one uptrend. It could be the one to hold for the next 6 to 9 months. If you're an investor, your stop should go here instead of a swing trade stop there. So I try to sprinkle that in, but it's really, swing trade focused.
Are there certain characteristics, habits, or traits that you've found that students or those you've trained who go on to do well possess?
Yeah, I think, being inquisitive and not just asking questions. So, for instance, people will ask me a question that, what's the formula for VWAP? And I'm like, come on, really? That they got Google for that. Just take some initiative for the things that are commonly out there. If you want to ask me some advice about, hey, Brian, I was in this situation and here's how I felt and here's what I did with my money. Now I know that you're engaged in the market. You're not just looking for where should I buy this, or, what I think that people who have a real rigid look at, it must, I'm going to back test the anchored VWAP. And hey, Brian, I back tested, it's only 37%. Okay, fine. Don't use it then. But the point is that there's so much art to the analysis that, a lot of that back test stuff can go out the window, I think, if you're a real good trader and want to develop your trading skills rather than just learning everything and just being an encyclopedia about the market. It's about, again, understanding psychology and what's driving the market so you can anticipate what might be next. And if you're wrong, be willing to get out and just move on.
Brian, if it's okay, I'd love to go through a lightning round set of questions with you. Just quick questions and pretty quick answers.
Okay.
The first question that I have is, what do you consider to be your greatest strength as a trader?
My timing in the entry and my ability to get out quickly if it goes against me.
What can traders do to avoid getting obsessed with a stock, whether it's got breaking news or the CEO said this about it, or they're saying on Twitter that this is going to go to the moon? What can traders do to avoid all of that?
That's a tough one because I used to have that problem. So for me, the only solution was just not listen to it, focus on the price action and work on myself and watch how the stock responds rather than trying to internalize my opinion of what that news was.
And how could traders help themselves avoid bias?
I'm not sure you can avoid bias. And in fact, that's something that I sometimes have bias. I'll look at a stock and think, hey, this is a good long candidate. and then it gaps up the next day and just fades the rest of the day. And, I see people on Twitter saying, hey, that was a great fade. We shorted it. Well, my bias was to the long side because it's set up on 4 different time frames. I was unwilling to short it because the other time frame said that's not the best trade. So, to avoid that is, I think you've got to recognize it and learn how to deal with it and accept it. And for me, accepting the fact that I might have a bias, I might miss a trade in the opposite direction is fine.
Are there any pieces and parts of your trading that you're still working to improve on?
Always. I mean, yeah, sure. I'm always working on, something for me is sizing, really legging into a trade big time. And I'm actually pretty good at it, but holding those ones where I have that confidence and not getting rid of so much so quickly, where I will, buy a 3x, size position, and I'll sell 2/3 of that outside size position that first day, when I should truthfully be holding some, because there's so many things more than that, because there's so many things pointing in my direction. So I to put it simply, I work constantly on being greedier.
And if you could give one piece of trading advice to all new traders, what would it be?
Know yourself. Another one of those phrases I love is, if you don't know who you are, the market's an expensive place to learn. So know what motivates you, know what your time frame is, and just go slow while you try to figure it out.
Is there anything that you do away from the trading desk that helps you once you get back to trading?
Yeah, I mean, I think the old adage, healthy body, healthy brain. I stay real active. I exercise at the gym. I go out hiking, skiing, biking. Just live a healthy lifestyle outside of the market, and try to forget about the market when it's not there.
How important do you think it is for traders to have a strong support system, whether that's a significant other or other trading buddies to bounce ideas off?
I think for most people that's super important, that you need to have that and feel like that you're not alone in this. That's what and a lot of people will do that on Twitter. They'll be super active on Twitter or Discord rooms or something. I mean, like they say, find your tribe, find the people that make sense, and find a style. Whether I don't care if it's not Alpha Trends. I'm not trying to be all things to all people. Maybe the people at Investors Underground, you've got the solution for a person, or maybe someone else has, with expertise and experience and great reputation, has what you need. Go find that. And it feels good to have a community to say nice job, or hey, we could have done this better, let's team up and try to work on these things.
Brian, for those listening who want to learn more about you and the way that you trade, how can they do so?
Well, my service is at alphatrends.net. I've written 2 books that are on Amazon, and my Twitter, I put a lot on Twitter. So Alphatrends, ALPHATRENDS, is where to find me there. I post my YouTube video there as well. So I'd say just go to Twitter is generally the easiest place.
Okay. And again, I highly recommend everybody go listen to what Brian has to say, whether it's YouTube or on Twitter. He has books available. They're all highly recommended. Brian, thank you so much for being here and taking the time to speak with me today.
Thank you, Anthony. My pleasure.
We hope you enjoyed this interview on the Investors Underground podcast. We have more great interviews that we believe you might also like, so don't forget to subscribe. You'll be notified of upcoming releases the moment they become available. Thanks for watching.